Hello, this is Byron, and I just want you to be safe before you buy your first stock. Okay? And I want you to understand stocks could be very dangerous, but very beneficial too if you know what you're doing. Okay, let's get started. There's four type of stock investors. One is the buy and hold type of person. They will buy a stock and hold it forever. You know, I'm not that type of stock person. The second one is the most dangerous. That's me. That is, I'm a trader. I buy a stock. When it goes up, I sell it. And that's the most riskiest part of buying stock right there. The third one is a spectator. That's the type of person that buy like little amounts of stock or just sit on the side and speculate if they want to buy it or not. They're not taking no risk at all. But you can't make money like that. And the fourth one is the dividend investor. The dividends investor. The dividends investor, because a lot of stocks pay dividends, and dividends, it could be a lot, and they wait for that dividends. It's a dividends date that's already set, and on that day they make extra money on their stock because the stock pays out a certain amount. You get money for free basically. And that's the four type of investors. I want to talk to people just starting out. The first thing you do, I said on my other tape, and I'm going to keep on saying this throughout this whole monologue. Don't get greedy. Do not get greedy. Have yourself a goal. Say Walmart. I'm going to buy it at $45 a share. Okay? And I'm going to sell it at 50. Stick with that. There's a lot of distractions. That Walmart stock, if you buy it at 45, okay? And you buy it at 45, but it's not quite there yet. You want to buy it at 45. I'm trying to make sure I explain it right. And it start going up to 50. I'm going to say it like that. You can miss your opportunity. Don't think because the stock is going up, oh, the stock is going up, I'm going to make money. No, stocks go up and down. So you bought it at 40. If you wanted to buy it at 45, it didn't go quite down to 45. It's like it's at 47 or something like that, but it goes up to 50. You think you lost some money. No, get away from that stock until it comes down to the goal you're looking for. Because it could easily go up and you buy it, and guess what? It shoots back down. If you bought 1,000 shares, shoot down 10 points, you lost $10,000 in 5 minutes. I'm just kind of exaggerating a little bit, but this is what you got to think about. Buy low, sell high. Do not ever buy high. The stock is going up. Oh, I missed the opportunity. No, just don't buy that stock right then. Find another stock or wait until that stock goes down. I'm expressing it kind of hard because I'm excited because stocks can be very dangerous. So you got to make it beneficial for you. Like I said, if you're a beginner stock, the safest way is I got to make sure I say this right. Buy like a big company, maybe like Amazon. It don't fluctuate that much. It's more stable. This is when you start out. That's the best way to buy stock when you're a beginner. Okay? Remember I said that. Invest your money into a brokerage company. And then that brokerage company, if you need your money back, they will wire the money back to you. You will never lose your money. Okay? And then when you invest in a stock, invest in a stable, solid, big company when you're a beginner. Now, if you got 20 years experience like me, you don't have to do that. But these are helpful hints to help you before you buy your first stock. Something else you should think about is the holidays. It's Christmas now. Stores like Ross, Walmart, GameStop, I could keep on going on and on. They're going to make money now. Guess what? If they make money, you're going to make money. So you got to think like that. Think before you buy your stock. But I'm coming back to this. I'm going to say this again. Don't get greedy. Do not get greedy. Have yourself what you're going to buy it at and what you're going to sell it at, and stick with that. If that stock do not go down to the price that you want and it start going up, you missed the opportunity. Move on to something else that's a better buy for you so you won't lose no money. That's all you want. The main thing of this, you want to make money, not lose money. And you could lose money by making a dumb investment in a second. Trust me, it happened to me. That's why I'm not rich right now, because when I was younger, I got greedy and I just tried to buy all types of stock because of the name. Oh, this is Walmart. This is this. I wasn't thinking or doing any research or looking at the news or nothing, keeping track of that stock. I didn't do no research at all. And it cost me a lot of money. And now I know the right way to do it. The key is don't get greedy. That's the main thing. Do not get greedy. Okay. The stock market is a proven way to grow wealth. It's a proven way. Perfect example. The last 30 years, the stock market has went up 9.9%. The last 50 years, the stock market has went up 10.8%. The last 100 years, or 100 years ago, I'm saying like that, it went up 10.5. It's a proven way to make growth. A proven way to grow your wealth. Yes, it is. Okay, I told you about the money transfer. If you think it's a fish, first of all, when you go and try to go to a broker to start your stock investing, Google it, find out what companies don't charge fees. There's a lot of free companies out there where you don't have to pay anything. Just wire your money there and you don't have to pay anything extra. But there are some companies that do. You got to be careful. Look into it. Research before you make your move, because that's your money, your hard-earned money that you've been working your whole life, and you don't want to blow it just like that. Okay? There's a lot of distractions when it comes to stock. A lot of distractions. Don't fall in love with a stock. Emotions and buying stock don't go together. Just because, ooh, Walmart, I get all my stuff there. No, emotion ain't got nothing to do with it. A good company is not always a good investment. Remember that. A big company is not a good investment. A big name company is not always a good investment because that stock could be overpriced. If that stock is overpriced, guess what? You're going to buy it at $200 a share. Oh, that's Walmart or whatever company it is. Guess what? It's going to start going back down because investors know they'll start taking their money out and the stock will go down and you'll start to lose money. That's something else to think about. So be an investor, not a gambler. There's a difference. Be an investor, not a gambler. There's a big difference. Okay? The safe way for beginning people when it come to buying stocks is, and I don't know if you want to do this, but a lot of people just do the ETF or index fund because you're buying a whole section like the S&P 500. It's a accumulation of stocks. And you can't make that much, but it's a lot safer. You can't lose much either. You're buying like about 100 stocks, Walmart, 100 different stocks all together. And you can just Google and read up on ETFs and index fund. That's the safest way to buy stocks because it's hard to lose money, but it's hard to gain money too. Okay, that's just another helpful hint. Okay, when you buy a stock, you are part owner of that company. A small percentage, but say you only got 10 shares or 100 shares, but you are part owner of that company. That's just something to think about. You are part owner. People don't realize that, but that's true. Okay? And you want to look for, how do I say it? It's something else to look for when you get your stock, when you get to a stock company. Almost all stocks, not all of them, mostly all stocks have earnings dates and dividend payout dates. Those are something you want to look at before you buy a stock too. The dividends day is when you get that free money I told you about. On that date, that's when they just put that money into your account. That's free money. And a lot of people invest that way. They see the dividends going to pay out big on April 7th. I want that stock right there because that's guaranteed money. It's like free money. It is. You can pay in dividends off that stock that you bought. Okay? And the earnings date is when they, I think it's every quarter, they judge a company on how it have done for the last 3 months. And if the company has met its goals and did good, that stock will shoot up like crazy from 20 to 100. But guess what? If that stock company did not do good, that company will go down. If the stock will go down, you lose a boatload of money. So that's a big risk right there. That's something to look at when you get your stock. Okay? There are different sectors when it comes to stocks. Say you're really good with technology. You could get stocks in technology. Say you're really good with banking. You can get the stock in banking. Say you're really good with retail or energy. It keeps on going on. Stocks have different sectors, and you could pick the sector that you want. Energy, technology, whatever you want. That's just something else to think about. Did I tell you there's some brokerage companies that charge money be careful. Just don't go. I'm seeing that again. When like E-Trade or whatever, ask them, do they charge anything for you to invest your money in there? I'm not a smooth talker, but I'm trying to get all these helpful hints out to protect you from losing your money, because I lost my money when I was young, and I'm trying not to let it happen to you. Okay, I got a couple of more minutes. Okay, and this is important. I want to make sure to save this for last. Okay, the stock market company that you invest in, they have a stock screener. I say this on all my videos. When you go to the screener, it asks you what stock do you want. Tell them you want a certain share price. Tell them you want a stock that's positive, a stock that says buy, a stock that says long, a stock that's overweight, a certain sector, like I said, a certain sector, a small cap stock, a large cap stock. You know, you say all kind of bullish, bearish, you know, whatever you want. So you could tell the company what you want, and the analysts will do the work for you. They will find you certain stocks. They will send it to you, and you can pick what stock you want. A lot of this stuff is pretty easy. I think I covered everything. Make sure. Okay, the last thing is everybody be safe. Have a happy holidays. Like I said, I'm trying to do my best to help you. My name is Byron, and I'm going to make more tapes or more videos. And I just want everybody to subscribe and like everybody else do, and share this video. And every time I come up with some more helpful hints, I'm going to express it to you. And be safe out there. And God bless you. And thank you for listening. And I just want to add one more thing. I'm not a big company. I'm by myself, but I have 20 years experience. I'm not going to make any guarantees like some of these people on TV. If you come to my company, I guarantee you can make something. No. The first things first. Teach you what you're walking into. That's what I'm trying to tell you. I'm trying to teach you what you're walking into. It could be safe, but it could be dangerous. Okay? I love you. Have a nice day. I'll talk to you later. Bye-bye.